The webinar will begin shortly. Please remain on the line. The broadcast is now starting. All attendees are in listen-only mode.
Hello, good afternoon. Welcome to this webinar. I'm Devarsh and I'm joined by my colleague Nagaraj for this midweek market outlook webinar. So the flow of the webinar is like this. First, we'll talk about the performance for the month and year to date for 2024 and also look at the recent report which we have released. Then I'll hand it over to my colleague Nagaraj. Nagaraj will show us the how markets are poised technically. Where are we headed next? What sectors are in favor? Where should we book profits? So all this information is coming up. First, let's look at the June month. So we have issued 11 new fundamental reports in the month of June, including the previous one. We were able to book profits in 5 and loss in 3. 83% is the success ratio for this month, including losses and all. The average return is about 10%, and average holding period for these fundamentals call are 88 days. Now, for the 3 months, April, May, and June, for the first quarter, out of 46 calls which we have issued, 39 we have been able to book profit, 7 where losses were there, about 85% success ratio. 100 days is the holding period, and average return is about 12%. And you know all these ideas, mainly Talbros, Kirloskar, ITD. These are the ones which has given us good returns in a matter of about 100 to 50 to 100 days. For the full year last year, we had 94% success ratio, 15% was the average return, and the holding period was 86 days. So this is for the fundamental team's performance. If we look at the various winners, Patel Engineering, India Bull Housing, Jindal Drilling, these are some of the large winners of the last year. Now, for the technicals, on derivative side, we have done reasonably well. On e-margins, all the various open calls hit the stop loss. About 9 were hit the stop loss on the election day, and that is because of the volatility, the one-day volatility, but we will not shy away from that. So if we include that, 40% is the success ratio of MTF, but if we consider the April, May, June, it is about 65%. Another 9 were hit the stop loss in April and May, so total 20 have hit the stop loss, 37 is the profit, and despite that, we are about 4% average return in 9 trading days. Other than that, important one is the cash trading, where we have about 80% success ratio, and any other category about 70 to 85% success ratio we have. This was the performance for the last year, where we had about 75% success ratio in e-margin and about 80% success ratio in cash trading. So this is what we achieved in the month of June and first quarter. Apart from that, we also issued one monthly strategy report today. So I will request all of you to go through this report, where we have given information about key positives and key negatives for the month, the information on various local and global indices, the information about GSEC market, fund activities, commodities and currencies, and then what is the outlook going forward, also about the gold. So all this information is really available on our monthly report. Now let's go to Nagaraj to see how the markets are poised in the short term. Over to you, Nagaraj.
Thank you, Devarsh. Is my screen visible?
Yes, it is. Go ahead.
Okay. Hi. Good afternoon, friends. In our last monthly technical outlook report on Saturday, we have mentioned categorically mentioned about the market placement from the smaller to larger time frame. We have showed daily, weekly, monthly, and we have mentioned that immediate at that time market was around 24,000 odd, and we mentioned about the immediate upside target of around 24,400, and the next would be around 24,950. as per the Fibonacci extension placed at the higher levels. Now, after 3 days, we'll see from the smaller to larger time frame how the market are placed out. Friends, from the smaller time frame in this chart, we can see clearly the market is in a trending on the upside. Today we have seen formation of a gap, even though market has moved into a range bound action. Market made a new all-time highs, continuously making it over the last few sessions and sustained at the higher levels. This is intraday chart, and market is Nifty is sustaining above the intraday 10 and 20 period EMA. On the daily chart, a small candle was formed on the daily. Everyday market has been continuously moving up, forming new highs, and even though a few days back we have seen some small negative candles, smaller consolidation, minor dips from the higher levels, and though market placed at the higher level, still there is no indication of any important reversal confirming at the higher levels. So every day we are making new highs, and this trend, at least over a shorter term, is likely to continue. So the doji, on the contrary, indicates some confusion state of mind normally, but we have seen some doji formations in the past also in the last month, and after that doji formations, market consolidated 1 or 2 days and eventually bounced back from the lower levels. So on that front, I'm not expecting any bigger reversal from here onwards. And though there may be a smaller consolidation or a minor dip from the higher levels at the 100, 200 points at the lower levels, and at 24,100, 24,050 is going to be a strong support for the Nifty as present, and on any dips is going to be a buy on dips opportunity, and we could eventually see Nifty forming new all-time highs above 24,300 odd levels. So on the weekly time frame chart, the trend is clearly up. We have seen formation of long bull candle in the last week. The follow-through up move has already started, and Nifty formed a reasonable bull candle on the weekly. Weekly is not yet over. So the trend as per the weekly time frame is still up. We would continue to see this up move at least for the short term. On the monthly time frame, friends, we have categorically mentioned the last month's candle formation along lower shadow with the upside breakout of the range moment of the previous 5 months is indicating. We have mentioned that similar kind of a pattern has happened in the past as well. If you consider over the last couple of 2 years, whenever the market has consolidated, market has witnessed a downward correction or a range moment, whenever the market bounced back from the lower levels after forming a bottom, at least it has moved up for the 2 or 3 months. We have seen similar kind of formation in October, September, October 22, and same at October, November 2022, and again in December and November, December 2023. Similar kind of a pattern has happened over here. After moving into a range bound action in the month of January, February, March, April, May for 5 months, Nifty has broken out of the range in this June, in the last June month from the lower levels and bounced back. Initially, at some point intra-month, it was showing some downward correction, but eventually at the close of the month, it has bounced back from the lower levels and closed higher, indicating a upside breakout of the range moment. As per this theory, we can say that at least one more month of up move is likely. At least we could see a good amount of up move in July month, as we have seen as per the longer term charts in the past as well. So as we have written, as we have mentioned in our monthly report, we would continue to be with the same view. Market trend remains up at the higher levels. 24,400 is offering a resistance. Market may consolidate at the higher levels. Small dip could occur, and at the lower levels, 24,100, 24,050 is going to be a strong support market for the market, and we could see Nifty bouncing back from the lower levels. Once the resistance of 24,400 breaks out on the upper side, the next upside levels to be watched next upside target to be watched is around 24,950 levels, as 1.786% Fibonacci extension would come in. Current 24,400 is 1.618 Fibonacci extension. So these are the two targets, 24,400, and on a break above 24,400, we are likely to see Nifty moving towards 24,950 levels. Friends, on the Bank Nifty has bounced back sharply after the news of HDFC Bank and placed at the new highs. The overall chart pattern of Bank Nifty is looking positive. The formation of higher tops and bottoms on the daily time frame chart, the placement of the support of 10-day EMA is continuously indicating that market bank Nifty is likely to trend higher. From here onwards, Bank Nifty could move towards 54,500 levels, which is the next set of resistance for the stocks. And at the lower levels, Bank Nifty could find support around 52,000. Friends, we'll look at some of the sectors and how the sectors are pan out. First, we'll look at the broader market indices like mid cap and small cap. So this is the mid cap sector. This is the weekly and this is the daily. If you look at the daily, continuously moving up. Initially, we have seen some higher tops and bottoms. And now, after the range bound action, after the small decline of last session, a mid cap has bounced back again from in today's session, is indicating the upward bias for the broader market and likely to see a new high formations in mid cap as well in the coming sessions. If you look at the smaller small cap 100, the similar kind of a pattern has happened after a small negative candle. It has bounced back in today's session and made a new all-time high. The overall chart pattern, weekly, daily, of Nifty small cap and mid cap are looking positive. They are continued with upside momentum, though they are placed at the higher levels. Still, we are not expecting any reversal formation pattern forming at the higher levels. That means we could see most upsides in broader markets as well. That means the buzz in selective mid and small cap stocks could continue. So one may look to continue to add these stocks for the reasonable gains in the near term. If you look at some of other sectors, banking, we have seen banking has broken out and poised at the higher levels, and pharma, healthcare are also looking positive. This is a chart of healthcare is continuously moving up. After a range of 2 sessions, it has moved up from the higher levels and placed at the resistance. And financials, bankings are also looking positive. And IT is the one, friends. This is the one we have seen some good traction in the IT mid cap, IT small cap, and frontline IT stocks have moved up recently. The overall chart pattern of the IT is still looking positive. After the important bottom reversal around 32,450, 500 odd levels, this IT sector has continued to move up over the last few weeks, and the trend remains continued. And there is no pattern of any selling pressure emerging at the higher levels. We expect Nifty IT to move towards the new all-time high above 38,550, 38,600 levels. Metals and realty metals are the one they are showing range bound action. They are still in a range, but there is a positive pattern developing in these sectors, especially realty and metal. We could see upside breakout of this range movement in metals and realty in the coming sessions. FMCG continues to move up after a negative pattern of last session. It has bounced back, and which is indicating that formation of negative pattern of the last session could be nullified, and we could see continuation of up move in FMCG. 58,500 is going to be the next upside levels to be watched. So some of the key prominent FMCG stocks could be limelight ahead. So this is a short brief from the technical side. Now over to Mr. Devarsh.
Thank you, Nagaraj. So now we are open to questions. If you have any question, you can put it in the chat box and we'll try to answer as much as possible. So somebody named SS is asking how to get monthly technical reports and strategy reports. So there are 3 ways to get it. First, obviously, if internally it is available on our social media platforms like WhatsApp Research Group. If you are a customer, you can get it through your relationship manager, as well as you can get it through the HDFC Securities app and website. If you need any assistance, do connect with the customer care, they'll help you. How do you analyze the current open interest pattern of Nifty? So we do analysis of the markets from an open interest perspective and share it with our group customers. The derivative daily report is available in periodic reports on our website. You can check that. Ronak Agarwal is asking about PSU stocks. So near-term PSU stocks, PSU as such is a large basket. There are stocks in various categories and various sectors. The sector-specific moves are happening, but overall, PSU stocks have been buoyant. Some sectors like defense have run up a lot. There we need to turn a little cautious. On the same time, the construction side, chemical and fertilizer sectors are looking strong to us. Banking, Sudhir Khanna is asking about banking. So banking is one of the most attractive sector, especially from the fundamental perspective, from the valuation perspective. The private sector large banks are looking like there is some room to grow. Most of the banks will come out with their quarterly updates in a day or two. We will look at the different update coming out from various large banks, but the inklings are that the way kind of update we got from Federal Bank and other smaller banks, it is looking like that the banks are headed higher, and we have highlighted in our last monthly as well as recent reports that the Nifty Private Sector Bank is headed higher compared to the other sectors. So we are bullish on banks. Anything else you want to add on banks, Nagaraj?
Yeah, Bank Nifty has broken, as mentioned, Bank Nifty has broken above the hurdle. I'm expecting private banks, ICICI Bank, Axis Bank, and some other private banks are already moved up. They are likely to continue. I think this time would be the PSU banking stocks. They are in a consolidation mode. They are in a range bound action. I'm expecting this time the PSU banking stocks could break above the hurdles, and we could see some few selective PSU banking stocks could be in limelight.
All right. That brings us to the end of this webinar. I hope it has been useful. We'll connect with you again for the fortnightly market outlook. Thank you for joining and have a great day ahead.
Thank you.